Hey guys, how's it going?
Hello,
Can you hear me
hello.
okay?
How's it going?
All
Yep.
right. I'm just going to get right into it. So this is JBear Trades. You guys might have noticed some of his posts on X or his YouTube videos, which are great. He has a lot of really good insight on trading. He has a background in institutional trading, and now he trades, I believe, some prop and his own personal accounts. But if you're not following him already on X and YouTube, you definitely should. Some of his recent videos have been killer, and that's what we're going to talk about. We'll just get right into it. How's it going?
Super excited to be here, man. We've talked kind of in the background the past few months just about, different topics, and I really love what you guys are doing. So excited to chat.
Great. So we could probably just skip, what you've done with prop and just go back to people like to hear about institutional trading. So let's hear what you have to say. Like where did that start and what was that like?
Yeah, so for me, it was kind of a crazy start. I was just some random person that wanted to do something where I didn't need a bunch of people involved because I was in real estate previously, and I wanted to do something different where I didn't have to rely on a bunch of different people. And I started out the same way I'm sure most people did. I was just watching a couple of YouTube videos. I will say though, there is a caveat to that. I actually went to school for quantitative finance, and I dropped out maybe a year in. Like I didn't really, it wasn't something that I was interested in. It wasn't, fun, very boring and tedious. And I actually saw some YouTube videos on trading, and I started like dabbling a little bit. And I had a good amount of money saved up from my real estate investment company, and kind of poured that all into a trading account. And I had enough money to survive, enough money to trade. And I got really lucky. Full disclosure, I got super lucky in the beginning. I had found kind of an exploit in ES, and before too long, I think maybe 6 months, a year, and I don't know the exact timeline, I stumbled on a strategy, and I was crushing it. I did have some connections through real estate, through some investors that were friends with people at a couple firms, and I just kind of put my results out there, not just excited about it. I didn't even know it was a big deal. I just assumed that you know it was whatever. And I kind of passed the results out to a couple buddies that were investors, and they passed it along to a couple firms that reached out, and I ended up getting hired in uh, like under a year after I first started trading. So it was pretty crazy.
Wow. Yeah. How much would you say your educational starting point had an effect on you looking for an opportunity to trade?
Man, that's a great question. I think for me, having that background, I talk about this in a couple YouTube videos, but having that background of like physics, math, science, having that process in stepping into trading with that type of mindset or that type of thinking, right? I don't know if it's if that's something we all can do, right? I don't know if that's like a knack thing that you're just born with, or something like that you naturally gravitate towards. But I think that uh, that had a huge impact, and it still does to this day on my trading.
Okay. So I'm curious actually. Sometimes it sets the direction for how you trade. What were the YouTube channels that kind of piqued your interest and showed up in your feed that
Oh,
got you going?
I don't even want to say it was like the ultimate Furu stuff. I don't even know what the name of it is. I see him pop up from time to time, but it was some type of Ninja Trader pullback strategy. I don't even know what the YouTube channel actually was called, but it was the most simplistic thing in the world, and I thought I was just going to jump in and make thousands of dollars a day, and
So it was futures.
it was futures. Yeah, I actually previous to futures, I did start trading a few years before that. I didn't even know I was trading. I guess I was trying to invest, but kind of in between trading, a little bit of crypto and stocks. I did super well in that, which was pure luck. Like I'm not going to say that was any skill, but yeah, when I first dove in headfirst, it was futures.
Oh, okay, cool. So you did you stay in futures? Have you ever gone into the equities or anything else? Something with
Yeah, so
options or
so primarily I do trade futures. That's like my bread and butter, kind of what I use for my income. But I have traded stocks. Was in small cap world for a little bit. I didn't love how difficult it was to short, and like thinking about that, and there's different stuff that goes into it. It was kind of complicated. Um, I will always jump back into crypto whenever I see there's an opportunity. I have a super, like, almost perfect track record in crypto, which is, again, I think it's pure luck, but I've done really well in that, so I will jump back into any type of crypto coin thing whenever I get a really high probability setup. Options is something I know very little about, which is kind of embarrassing. A lot of people around me are really good with options. I know basically nothing about them, and that's kind of like the next phase of my trading career is going to be diving into that.
Yeah, I agree. I'm actually in the same boat. I know a bit about options, but I've never jumped in. I know it's on my future to-do list though, but maybe I'll never get there. Yeah, so you're working at, it was a private equity firm, right?
Yeah, it was kind of weird. It was like this really, I'm sure these exist all over the place, but it was kind of like the underground private equity, like it really hush hush the whole thing. And that part of the reason too was I didn't really know what I was getting into. I didn't know exactly what it was. I knew the investors involved in it, and that's kind of why I trusted them enough to get involved in it. But it was very remote. Like, it wasn't, you didn't really get to work with the other people there. You saw them, like we all shared like P&L was shared on like a live like leaderboard type thing, which was really cool to see. But as far as like actually like interacting with them, it was very few and far between.
Were your teammates also trading futures? Was it a full desk like that, or?
I was the only one trading futures. The other guys, most of them were really big crypto guys, like really, really big. And then there was a couple equity guys that were there that they did pretty well. I think I was like maybe the smallest or second smallest.
I'm always curious, how did risk work there? How did they work with you on risk?
Well, it was kind of funny because a lot of my coworkers were way bigger than I was because they'd been doing it for a lot longer than me, and they were using massive, like unfathomable size, at least for me. And when I came in there, like I kind of told them what I wanted to do, what I thought I could do, and they essentially said, you can trade up to 20 contracts on ES. You can do whatever you want. You have your setup, trade your setup, don't do anything else, period. And that's pretty much how it worked. They were very direct in the way that they handled their traders. Like, each trader was specifically tailored to that trader. Whatever you were good at, they were going to give you money to do it. And they were going to basically have you take it until you broke your strategy. Once you broke it, they left you at that size, and you just ran with that until it stopped working. And then you would obviously have to find something else.
I see. So what would that finding something else? I assume eventually it maybe didn't work exactly as planned, and you had some periods like that.
Well, yeah,
by the way you're saying your luck goes, it sounds like it just everything works. So I'm waiting for a downfall a little bit.
Oh, there's one there. Don't worry.
Okay, good.
Yeah. So essentially, they had me. I got to a point where I was using 20 contracts on ES. That's what I would use. That was like my normal whatever. Well, some of the crypto guys were really crushing it, so they kind of didn't care what I did. Being the other smaller people, they didn't really care, right? Because we're small fish compared to, like, now obviously they didn't want to lose money, but we had a proven track record. We showed what we were doing. So what I found out later is a lot of times when you're with firms like this, they will take your strategy in the background and just throw everything they can at it, size at it, whatever. And I'd been using this edge for a long time, right? A long time. I'd back tested it a long time, way further than when I was actually trading it. And it always, this is like I think it was like 3 to 5 years that it worked. So it was, tested really heavily. But eventually one day I found out that one of the guys was putting like 100 contracts at this, or 200 contracts, some crazy amount of size. And obviously it could be coincidence. I'm not going to blame anyone, but shortly thereafter it stopped working, and it just stopped. So I was and I didn't know how to trade, right? I'm just pushing a button every day. This is an exploit. This isn't me reading the market. I'm literally showing up for maybe 2 minutes, 3 minutes a day, if that, pressing a button, hits my target, stop loss, and I just leave. That was
interesting.
Really of
it. Did you end up having a what's the term for that? Basically when you're working, you got the job there, and you thought this was just how it was, and then now you're on a team, you're on the desk, you're doing your trade and you're like, I just had my one exploit that I found. Did you feel out of place? Did you have that that sense of like they're gonna
Imposter
figure
syndrome.
out? Yeah, exactly, imposter syndrome.
Yeah, I did. Like, and I had like it actually, kind of gave me these self-esteem issues. You know what I mean? Like, I was doubting myself. I'm like, I don't belong here. Like, like I said, I didn't get to interact with them a lot, but they didn't care. At the end of the day, it's making money, and now I know that. Right now, it doesn't really matter. But then I truly had no idea how to trade. Like, I remember someone was talking about an edge, and I didn't know what that was. I had no idea what that even meant. Mind you, I'm sitting here, collecting a good amount of
Right.
money out of trading, but I had no clue. Yeah, I definitely didn't feel like I belonged there. But the funny part is most of those guys kind of went full port because the place I was at was really loose with, like I said, risk and stuff like that. And when the whole crypto thing happened, a lot of them blew up. So I was actually one of the few to survive because I knew once it stopped working, I would just stop and step back. Whereas most guys, when their stuff stopped working, and they kept pushing. Like I said, I've been lucky enough to never lose a ton of money. I had one bad losing day there, but for the most part, whenever I would lose, I would just step back and not trade. I wouldn't just keep trading into an infinity.
You really have a natural feel for it, huh? So that edge, it ran out of time for whatever reason. Maybe it was because your guys were copying you with way too much size. It was impacting the market, possibly, or maybe it was just a market shift or market context just changing. But once that ended, where did that leave you?
That basically, I was screwed. To put it lightly, I didn't know what to do because, like I said, I didn't know how to trade. So essentially, I got in a break-even period, right, where I wasn't losing money because I knew enough not to do that, just using simple math, like I kind of teach to people I talk to, just really favorable risk reward and just be really smart with my risk. And it was probably 2-3 years I just churned and went sideways. I was just I had to actually learn how to read price. I had to really like dive into actual trading, learn trading, and not just find these exploits.
Okay. So, yeah, I guess you want to summarize what that looked like. I'm still interested, so I'm sure everyone else is.
Super depressing. I think that's the best way to really think about it. I started off like most people, right? Like everyone tells you read books or look at psychology and nonsense like that. And nothing against books. I think they're great, but I think there's no book that you're ever going to read that is going to make you better at trading. Even if they give strategies out in the book, I still disagree with that premise. I think the best way to go is to pull up a chart. And mind you, I didn't learn this like 3 years in, but pull up a chart. You don't need a bunch of indicators, and just watch and just observe and observe. I didn't take notes. I didn't do anything like that. I just stare at the chart. And once I focused purely on the chart and not looking at strategies or setups, and I just watched, is when I learned the most. That was kind of like my big breakthrough.
So I guess that probably gets into I watched I rewatched your nuance video that you did recently, which I love. And everyone, again, make sure you check out JBear's YouTube channel. He puts out videos, and he's ramping up on how many videos he's putting out. But they're not very similar to most of the videos that you're going to find on YouTube. He's not trying to be like, here's a 90% winning strategy. He's trying to he shows a angle of trading that sometimes I struggle to communicate with people, because there's sort of a spectrum of, yes, watch, but you have to start learning how to do process at the same time. You want to have some practice that actually means something. So while in the beginning phases, definitely have a process and start looking for setups and what you're going to do with those setups. But to understand the nuances of the market and kind of what narrative really means, his video on nuances nails it in a way that I've never been able to communicate yet. So I appreciate that, because I'm going to be able to relay that when we're coaching and to our traders. But yeah, you got your chart up, so I'll let you just start taking over and explaining.
Yeah, so I'll talk a little bit about nuance and kind of like things that I look for and kind of how I approach trading in general. Now, obviously, I'm not going to say it's the best way. I'm not going to say this is the right way to go about it, but this is kind of how I found a way to be profitable consistently and not really diving into the stats. So I'll walk you through today's trades. There's only two, but they're pretty simple. I was trading YM. I don't think, I see a lot of people out there get locked into but like trading one market, and I think that is the worst thing you can do. I've traded YM maybe 3 times in the past 6 months. I don't trade it. I just don't. But when I saw an opportunity, I felt like I kind of had to steam in and just take the trade. So for me, what I'm looking at, I have, and isn't an exaggeration, probably 50, 60 plus different setups or strategies that I'm looking at all the time. And it's a lot to manage, and it seems like a lot, but usually what they are, they're all counters or variants of the same setup. So like, for example, down here, I have the open price. I believe this is prior day open, prior day ETH open. And my thought on this trade was, and I kind of use the ETH open as my VWAP, right? It's my average, my middle, right? Obviously, if we're above it, we're bullish. If we're below it, we're bearish. I mean, that's just the easiest way I found to frame my whole trading. So any type of trade I take during the day, it is based off of the open.
Right. And just for everyone out there, just remember these things. They're not mathematical. They're somewhat subjective, and that's what he's getting into is the nuances. So when he's talking about bullish over this level, bearish over this level, that means he's just generally, that's his bias, and that's what he's looking for. That doesn't mean you take a trade if it hits it, or take a trade if it drops below it. Which unfortunately a lot of traders are looking for something like that, which obviously we would love to have something like that, where something was that easy to follow and it just printed money, but it doesn't work like that. So yeah, I'll let you continue.
Yeah, absolutely. If no matter what setup I take, if you were to blindly test it, like throw it into a back test, it's going to be horrible, right? It'll probably be like 50-50, maybe 30 to 50% win percentage. Profit factor is probably 0, right? There's no inherent edge in any setup that I trade. The edge comes from putting the context and the nuance into the whole picture, right? You're looking at each trade you take as its own trade. You're not using, well, this trade worked 2 weeks ago. No, each trade is dissected and looked at individually, which you can do scalping. Like I'm taking some days I'll take 20 trades, but most days I'm taking between 1 and 5, and each setup I'm just looking at by itself. So for this setup here, and this is going to sound really bad, but this is how I trade. It's a lot of feel. It's a lot of, I have a place, like a line in the sand. I think I give Merritt Black credit for kind of putting that term out there, having your line in the sand. So whatever level, area, whatever you want to be involved in, and focusing specifically on that area. Now, for me, what I'm looking at here, like I said, is the open. So once price got down to the open, I did what kind of you're taught not to do, and that's I was front running. Whenever you front run a level, or whenever you kind of guess, I don't like using that word, but I think that's accurate. You take an educated guess at where price is going to turn. You're going to get a lot more favorable risk reward as if you sit there and wait for confirmation. I think one of the worst things you can do is wait for confirmation, because at that point you're losing the value in the trade, right? When we look at value, we want to see how close can we get to our stop, like how close can we put our stop. That's every trade I take is the first thought in my mind is, where can I put my stop? I know right here I can put my stop just below the open. If it presses down and pokes through the open, I can always re-enter, I can get back in, but I want to try to get that best entry possible, because it's going to help me with a more favorable risk reward and put math in my favor. So if I take, let's say, 4 paper cuts on that where I'm losing pennies, it doesn't really matter as long as I catch it right one of the times. Now, obviously, full caveat, did not hold this.
Yeah, I like that. Something that always goes through my brain, and it's hard because there's no right answer. And it's similar to what you're saying. So I agree. Take risk off, and then once the context improves, get risk back on. Not necessarily just because it breaks back over that level. But so do you have a system where you would put it like one tick below that candle? Are you that strict about it, or do you try to find some sort of volatility based, ATR based way of using structure?
Yeah, so that's a great question. I always keep VIX in mind, right? Like I'm not looking at the VIX, I'm not paying attention to that, but I'm judging off the volatility that I'm seeing recently, right? And I know that's not people want something hard to think about or look at, but it's just kind of a feel thing, right? recently when the VIX was, I don't know what, 50, 60, and the market's flying around, I can't have a stop right here. I'm going to get ran over every single time. So it's judging off the recent volatility that we're experiencing. And what I would do is, when I take these small entries, like this is on YM, but on NQ, for example, I might use a 5-point stop 90% of the time. Like, it's super rare for me to have bigger than a 5-point stop on NQ. Each market's going to be slightly different. And what I'm really doing is I'm looking for volume to dump. Like, obviously you can see here, we have that big dump in volume. Now, granted, it's the open, you're always going to see that big chunk in volume. But what I'm looking at is, what is that volume relative to what it normally is, let's just say on an average day. And then I'm kind of thinking about that in my head. Well, we had this giant move down, the giant spike in volume. I feel comfortable taking that trade, because whenever you get that dump in volume, that, you know, I'm looking at a 1-minute chart, that typically will signal a reversal. And obviously context matters. You can't just blindly do it, but that's kind of the framework I'm using in my head. And I'm putting a stop below whatever key level. It could be below the low of the candle. It's just something relative right there. There has to be a reason to put my stop here. You know, if there wasn't a level here, I'm not taking that trade. I'm not doing it. So just because the open's right there.
Okay. Yeah, go on.
Yeah, so I take this trade. And another thing too is, when size matters, like whenever you're trading. So like a lot of people out there will trade micros in some of these firms, and that's great. You know, you have to do that at certain times. I fully agree with that. But the one thing you have to be careful is when you're using limits, or when you're using micros or small, you know, it could be 2 shares of a stock, it can be whatever. But when you're using small size, it really affects your psychology, right? Like, if I had a limit order sitting here for 2 micros, this trade that I took right here, I'm going to hold that all the way probably to the top, because I don't care. But when you're using real size and you see real P&L flashing across your screen, that becomes a real issue, because you can see some numbers sometimes that, you know, scare you, to be completely honest. So it's good to build a system where you have these planned exits, and that's kind of what I'm working on now, is building a tool. I'm get ready to work with a company that's going to kind of help me build a tool for this. But the big thing is, whenever I'm exiting, I want to exit on price action. Here, I did not exit on price action. I exit because the P&L scared the living hell out of me, to be completely honest, right? It was a lot, and I'm not used to seeing that when I'm doing scalping. So this is kind of more of an intraday play. So ideally, the exit would have been, obviously, I'm not going to ride it all the way up here to the top, but I think the realistic exit was actually somewhere around the 700 level, but due to the P&L, I completely underperformed and mismanaged that trade. Full transparency.
So you're just looking at price action, candle structures, those kinds of things. Like, if price is turning around, you're not paying attention to volume down there. Are you purely based on the price action?
Yeah, so it's actually a combination between price action and volume. When we get up here, we have this turn. As you can see down here, I can kind of bring this up a little bit. As you can see, we don't really have a ton of volume indicating a sell-off, right? We have a good bit of, you know, decent amount of volume in here, but nothing really that concerns me. So as this pulls back right in here, this is technically where, according to my system, I should be adding. And instead, I pulled it off way beforehand. But all I'm doing is watching price. And as we move up through the day, and this is happening, obviously, I'm crying myself, you know, basically to sleep thinking about this, because I can't even look at it. But we get to the top, and this is kind of where, you know, I see consolidation. Whenever you get consolidation, especially after an extended move like that, mind you, I'm just reading price action, and I'm kind of watching the volume. This indicates to me that we're getting ready to turn. Now, how big will this turn be? I have no idea, but I do, with a fairly high degree of confidence, I feel comfortable taking the short, which I did right here on the break of the consolidation. So I can draw that out as well.
And that, actually, to backtrack a little bit, that 10 a.m., 10:05 range, that push, that red push to the left,
right here.
Yeah, that. What was your interpretation on that?
Yeah, so I actually had a level up here. It's the high day, but at the time it was, but that wasn't my level. But this, I'm getting ready to make a whole YouTube video on consolidation, because there's like 7 or 8 types of consolidation that I go into and look at. And it's something I've never really, I don't think anyone's ever talked about before. So I'm not going to say I created it, but I think I did, where I kind of classify each type of consolidation as different types, because there's a million different ways to look at consolidation. And this right here, to me, is completely different than this up here. These are not the same. This is in no way bearish, and this is no way bullish. And that there's a lot of context in that. I'm going to do a full video on that actual my ideas behind that.
But I think I understand what you're getting at is it's not necessarily that it's bearish that gets you out, but it can be the lack of bullish.
Exactly.
And it can also be the lack of bearish that keeps you in.
Exactly. Yeah. And I think a lot of times I won't look for something to be, okay, this looks bearish, right? I won't look to say this looks bullish. I just look for the lack of the other, right? So if on this, it just didn't feel like it wanted to sell right here. Like there's nothing indicated to me. Like this volume right here, if you look at it, on this candle, we had the majority of the volume spike, right? We cut down right here, and then we sold off into here. But to me, the volume should be on the volume dump should be on the green candle, not the red candle. When you see the volume dump on the opposite candle, like so if we're going up, that would be a volume dump on a red candle. That does not signal a capitulation or return. That signals a continuation to whatever side that you're going on. So that was, to me, again, this right in here somewhere should have technically been an add if I would have been managing the position correctly.
And so you mentioned the automated tools, which are, I assume, semi-automated. You'll flip it on and basically say, now walk the price action. Here's my rule set. Get out on under these conditions. I assume that's probably 100% objective, or no?
Kind of. I'm still working on that, so I don't want to say definitively what it's going to be, but what it will be generically is essentially something yelling at me to not touch the position, right? Let it go until I visually see what I want to do. And then obviously whatever tool that I build is going to give me signals of where I should be adding versus taking it off. Because if you've noticed, a lot of people, let's say, for example, you're long from where I was long at, right? I see this every day, and I was a victim of this for years. I would get out of the position down here, right? Because I'm like, oh no, it's going back against me. Well, most of the times when you're getting out of positions, whether it be long or short, is really when you should be adding, not getting out. So that tool is going to kind of help me look for places once it's coming back against me to not panic and just add to the position.
Right. Once you've established some sort of at least micro trend, I guess.
Exactly.
Point there. I think a lot of people hear that and they might say, oh, that means when it goes against me, I should probably just be adding.
Don't do that.
Then that gets into that whole, again, DCA, it's not a bad word inherently to add in or scale into a position, but yeah, don't take that as if it's going against me, it should be the area I'm adding, so I'll add. That's
you're on sides. Once you're on sides, yeah. If I was off sides, I'd never add. I'm not gonna say never, but I would almost never, unless it was something A plus, 95% plus probability would be the only occasion for that, and that happens maybe 3-4 times a year, maybe. But yeah, DCA is something to do for investing. Please don't do that for intraday trading.
Cool. So how do you take your steps after this? So now you've analyzed your day. I know you're working towards something that semi-automated, maybe a signal service to let you know to add or stay in, but you're still ultimately making that discretionary decision. So you had that trouble today. So I'm curious, what are you going to do to your process now to handle seeing that P&L if you continue to have days like this?
Yeah, so that's a great question. And that's something that I'm still kind of battling with. Last night, I shared something on Twitter where I kind of did the same thing. I held it for a bit longer than this, but I was using smaller size. I'm using limits here too. That's not one contract. But I don't review. I don't journal. I know it's kind of common for people that want to do that stuff. And I think that maybe has its place. But I think the best thing to do is kind of what I will do. I'll just deeply think. I'll just sit there. Like I'll have some screens up, but I won't actively be doing anything. I'll just be sitting there, like kind of staring at the setup, thinking like, what am I doing? Like what is causing this? How can I fix this? Where's a way that I can clean this up? And I know, like I said, that's completely counterintuitive to what most people do, but I think that deep thinking and actually trying to fundamentally understand how you can better, maybe not necessarily physically do something better, obviously, aside from getting out, but actually think of why that's happening and think of ways to clean that up. So for me, like after I'm done for the day, I will probably go do something completely opposite of trading, but the entire time I'm doing whatever that may be, I'm thinking about this exact thing. I'm thinking, okay, how can I clean this up? How can I build on this tool? How can I think about this trade differently?
Yeah, it reminds me of that meme where the couple's sitting in bed and the girl is like I bet he's thinking about all the other girls, and in his head, he's really just thinking about trading or strategy or something like that. I'm doing that all the time, of course. So, so this was today's trades. What would make you stop for the day? You said you talked about getting in 3 or 4 times. Do you have a specific system on that? Do you have a specific dollar amount per day, or per trade?
Yeah, that's something that I struggle with for years. I would say with 100% confidence, that was the biggest struggle. When do you stop? When is enough enough? And to be completely honest, I think it really depends on your strategy and what you're doing. I always preach, whenever you're trading, make sure you're trading for dollar amounts that mean something. Whenever you're trading and you have these arbitrary numbers, like let's just say $500 or 20 points or whatever, 5 trades, whatever, when you get into that way of thinking, it really makes you trade worse because you're trading for these arbitrary reasons, not actually why it matters. Like, I think for me, the whole thing is I'm always trading for income. I don't trade for fun. I don't trade because I want to. I trade for income. So whenever I set up like an idea, for example, like this idea here, the whole goal is to make money. Once I've made enough money that satisfies me, like conceptually, like I can understand, justify this amount of money, then I move on. And that takes a lot of nuance. There's a lot of feel to that. If you're just starting out, that may be $200 a day and you're like, hey, this is amazing, I'm great. Or if you're further along in your journey, it could be $100,000. I know traders that their daily target was like 50 grand, and that is something every day where they were upset if they didn't get there. And I think it really has to cater to where you're at in your life, kind of your financial situation. Another thing too, though, it has to be proportionate to your loss, right? If I'm, I'll use fake numbers here. Let's just say this was a $30,000 trade. Well, on my losing days, I can't be losing more than $30,000. My winning days must be multiples of my losing days, period. Sure. It doesn't matter if I'm scalping, doesn't matter if I'm swing trading. Swing trading, it needs to be exponentially more. But, intraday trades, it needs to at least be 2 to 3 times bigger than your losing days. And that was something I've heard so many different opinions on, but that for me is what works the best.
Yeah. And definitely for newer traders, just have a daily loss limit, and don't even use ours as an emergency. Ours should be an emergency stop. So just you won't have the intuition yet, right? You're going to need time in the markets, understanding your losses, understanding how what the markets are currently doing, what you should expect out of them, what you've been recently getting. I completely agree with what you're saying here. Just having all that context is very important. In a perfect world, we just focus on our strategies. We only take our strategies, and it's basically, if you see your strategy, you would take it. But there's nuances to that as well.
Absolutely.
And it's just gained with experience. Okay. Is there something else you wanted to go over on this? Maybe how you can when the trade got hit there, you got out. What did you go through? You didn't think about getting back in once the logical side of you kind of came back into the front line, and you started realizing I shouldn't have gotten out there. The emotions were fading.
Yeah, so I'm always like, I tend to be super emotional when it comes to my trading. I know that's kind of like, you don't want to do that, but I think in a way that kind of empowers you to step up in certain situations. Like it can also hinder you, definitely has me in the past, but it also kind of gives you that, that emotional attachment to the trades. It kind of makes you care more. So for me, once I took this trade, what I want to identify first was I correct in my trade? Yes, I was correct in what I was thinking. Was my stop placement correct? I think my stop placement was correct. My exit was horrible. Already established that. But I think what I have to understand is I used to want to jump back in and say, okay, well, I'll do this. I don't know that this is going to go up here. I have no idea. What I know is my target, like I said, was somewhere up around 700. That was my target. And for me, once this trade already left my area, all I'm doing is hurting myself by re-entering. I have to take it on the chin, say, hey, I messed up, period. Tomorrow I'll figure something else out. Now, this whole trade idea was separate from this trade idea up here. Okay, of course that keeps going down. Oh, good Lord. I don't know how much money I lost right there. But anyway, so once we get to the second trade idea, this is completely detached from this. These have nothing to do with each other. So once we're up here and I'm into this short, again, I kind of failed by looking at P&L, and I know you can say you can use points, but you still know, right? You're not going to trick yourself. If I say, well, I'll just look at points, or I'll just follow my system, your system is great till you start seeing numbers that people might work a year for, and then your system goes out the window, because that ultimately always was going to matter. There's no psychology tricks you're going to do to get that to go away. It's just about experience, and you have to really practice desensitizing yourself from money, which, like I said, if you're coming from somewhere, like I've noticed this, when someone comes from a high earning career and they go into trading, I noticed oftentimes, now granted, I'm assuming they know what they're doing. If they're losing, then yeah, it's bad. But they're so desensitized to the numbers that they're actually really good at holding trades, and they're really good at letting trades play out or swing trades. That is a skill, right? That's not something you're just going to naturally have, or you're not going to sit there and read a psychology book and it's going to fix it. It matters directly to your living situation. So for me, once this got up here, completely new idea. My mindset's completely reset. And this trade actually went against me a little bit. So I got in right here. It's hard to see, but I got in right here. And the trade actually went against me a tiny bit. So I can measure this per contract, what this went against me. So $60 per contract. Now, once this happened, my stop is right here. That lower high from right here is my signal. If it breaks that, you need to get out. I'm just reading price at this point. Volume, we had this giant spike in volume up in this consolidation. Again, another signal. Hey, this could reverse. Now, the caveat was this red bar, or the spike in volume, was on this red candle, which I don't like to see. I'd like it to be on kind of like these green candles right here. But then I watch price and it tends to roll over. So once it rolled over at the top, mind you, we are way overextended. I mean, I don't think you need to be trading for a few months to know that price doesn't normally look like this on YM, right? That doesn't normally happen. So once that rolls over there, I'm simply using the 90 MA as kind of my stop. And again, I got suckered by the P&L, but essentially this 90 MA is an incredible indicator for staying in trades. I will use the 90 MA as kind of like my trail. I will use prior bar highs, not on a 1 minute chart. Don't do that because you're going to get stopped out instantly. Prior bar highs. You could do ranges, like, so the size of this range, I can measure the size of this range here and use that in multiples to the downside to measure how far this trade could go. It really, really depends, but the whole thing is picking one of those and definitely sticking with it. I think is the best way to go.
Yeah, it's super helpful, the 90 EMA. It's a really good reference point, and when price action's really moving, it can keep you in quite a while. It is funny though to look at this. So do most of your strategies revolve around a 1 minute time frame for candlestick structure? Do you do a higher time frame analysis? What's that look like for you?
Yeah, so I actually don't do. I think a higher time frame analysis, just from my experience, was like the worst thing for my trading. So I will not do that. If I'm trading on a daily time frame, I'm using a daily time frame. If I'm trading on a 1 minute time frame, I'm only using a 1 minute time frame. I rarely drop down or go up in time frames. It has to be something super extremely obvious. I don't like having these biases in my head, even though I may not have a plan directly for them. I don't even like looking at them because it puts it in my head. I just don't like doing that. So I really will trade off of the exact time frame. The only difference is something like the capitulation in gold, that giant move that happened. I think it was like April 22nd, maybe. I don't know. Back then, then I did drop down to a higher time frame because there was so much size on that I had to manage it more safely, and I could do that kind of scalping in and out on a 1 minute chart.
Do you hold positions for swings, or is it all intraday?
Yeah, so I will typically scalp. So 1 minute, like under, I think my average hold time is like 30-ish seconds, or I will trade a swing. My recent swing was in crude. It was probably my best swing ever. In the breakout back on May 31st or June 1st, I was long. It was probably one of my best trades, but I will swing only if these are only A+ setups. I will not take a B setup. I will not take a C setup. I need to have the probability at least 90% and over due to margin requirements, stuff like that. It's difficult to swing these positions. You have to have a lot of money in your account. So I only want to do those on the highest. I want to keep that money in there only for those specific situations.
Nice. Okay. Awesome. I think that was a good summary. Maybe we just hop into some Q&A and keep it going. There we go. You trailing your stop. Yeah. So he was just talking about that. I don't know if you want to say it again, but he's talking about how the 9 EMA is a really good indicator for him to trail his position on price action. He also looks for price action to form either either the lack of continuation. If he's in a long trade and it stops looking bullish, he'll get out. It's not necessarily that it looks temporarily bearish, he'll get out. But rewatch the video. He just went over this.
Exactly.
So, check out JBear. Straight up compliment. That's good.
I appreciate that. Yeah.
Let me think. We are going to be doing the giveaway, so make sure you guys click that link and sign up for that. Yep, definitely check out his content. Very important question, JBear. Why aren't you using Sierra?
That's actually a great
on your screen.
Great question. And one of my good trading buddies, he's like a Sierra expert, and I like charting everything on NinjaTrader. And I like doing that because I'm a moron and I like to keep things extraordinarily simple. I want the most basic of basic things to look at. The more stuff I can mess with, I tend to make worse decisions. I want the most plain, least amount of tools, just simplistic thing I can look at. And I am working with another company here soon where I'm going to be adding like tools, but I don't want those tools on my platform. I want the fastest execution. I want very simplistic. I want nothing running in the background. It's always about speed and efficiency. And I think the best way to do that, not saying Sierra isn't, it definitely is, but for me, I want something extremely simple and clean.
Yeah, that makes total sense. Sierra is probably the furthest opposite of simple. I always say if you can get through their website and figure out how to buy the product, you might be capable of figuring out how to configure Sierra as well.
Absolutely.
Was asking what other levels do you look at?
Yeah,
go ahead.
I always use the open, so I will use the ETH open, the RTH open, prior day close, prior day high, prior day low. Those are the only levels I use. I don't use any intraday levels, unless it's some like massive level that has been like super obvious for months, but those aren't very they don't happen very often for me. But it always opens, closes, highs and lows.
Always some interest in those levels. So here's a question about scalping, and so here's an interesting thing with the market changing recently. I think there's been a lot of traders that have had fixed sizes of contracts they're used to using and fixed amount of drawdown they're used to using. They haven't adjusted very well, so they're getting stopped out a lot, and they're not really reading how much more volatility has entered the market in recent months. And I think there's been a general sense of, because I'm getting whipped out all the time, I need to do more scalping, which isn't necessarily a bad thing if they're reading the market that way and their strategies work that way. What do your scalps look like? This is obviously a bigger trade. So are you taking scalps? What would that look like to you?
Yeah, I scalp every day. Today's the only day I didn't really. There was one other day this week where I didn't scalp, but almost every day I'm scalping. That's kind of my income. That's my everyday thing. And I think it's important, even if you don't have a strategy that is scalping, I think it is always important to learn how to scalp, because that's where your execution comes from. And that can be applied to any chart. Just because you scalp on, let's say, a 30-second, 1 minute, 2 minute chart, that doesn't mean that doesn't directly apply to these higher time frames. But I think the first skill, and something I noticed in being in multiple props, were the lack of execution. Everyone there that struggled sucked at execution. They had great ideas, they had great setups, but they sucked at executing. So I think scalping is the best way to do that. And for me, if I was teaching anyone, the first thing I would teach them is you have to learn how to scalp to build up your execution, and then go from there. And scalps can be extremely simple. Like, so for me, one of my scalps that I have a course on, but you don't need to take the course. I mean, this stuff's super easy, simplistic. It's just off the 9 EMA, right? You get price breaking and holding above the 9 EMA. Now, obviously, you're using context. You're looking at little nuance here and there, kind of where it's at on the day, what's going on, and you're just taking trades off the 9 EMA. Is one of the easiest scalps there are. It's simplistic. There isn't a bunch of indicators that you're using alongside of that. You're literally just looking at the 9 EMA and looking for price to react on it. And it's the simplest thing in the world to do. Obviously, it's not easy, but it's very simple.
Yeah, I like that. And what I've heard at most of the kind of brick and mortar props and institutions, that they do want you to scalp in the beginning, which is funny because a lot of competitors in our space actually have rules against scalping, and you have to hold for X amount of minutes, and it just blows my mind, like what they're doing to these traders. But so I think screen time is really important, but screen time is not as important as execution reps. So what you're saying totally resonates. However you need to do it, one micro, just start getting some reps in if you're newer, and start getting a sense for microstructures breaking, small stop runs, those kinds of things, and watch how there's a push in the opposite direction. Try to find those patterns and get a feel for those patterns based on the context of the day. So like in his case, he took that long, market's still rising. His thesis on the day was about a rising market. It started proving itself, everything about it, all the conditions showed that the market was heading in that direction. He could have taken scalps while this trade was in play. So he could be adding risk, removing risk in small portions for small moves. And you can see many opportunities on the 9 EMA, just like you said.
Absolutely.
I think the combination of price action with the 9 EMA will give people a really good sense of don't trade against that if you're scalping. You might hook a fish every now and then that way. And of course, there's plenty of strategies that would go against the 9 EMA looking for reversals. But for scalps, I would definitely recommend sticking with those lower time frame trends.
Absolutely. Yeah, whenever you when you start splitting the 9 EMA, that's a really great time to lose money. Like if you want to lose money, I highly suggest trying to do anything in this area, because that is, I think I've mastered that over the years.
Nice. It's so easy because every now and then you'll get, you'll hook a fish and it's huge. Like it just drops out of nowhere against it.
Yeah.
And then you're like, oh, I was right. I should have shorted there. And it'll just kill you. You'll just do it 9 times in a row. And then the 10th time you'll get it, but then it won't give you what you want. And you watch your pin all go. JBear, appreciate the content. So he does provide education. He's got a course. I haven't checked it out yet, actually. I assume it's good. You said it was just sort of the basics.
It's all my scalping. My scalping is so simplistic. It's ridiculous. Like, I know I probably would sell more if I did this complicated thing and it added volume profile and volumetric bars and all this other stuff into there. And but it really is, you don't need that stuff. And I really try to keep it as simple as possible. And I think a lot of the guys in my course, what resonated with them the most was just learning how to read price, right? Like I even talk about in here, my whole thing is teaching you how to read price, how to look at value, how to understand. You don't need, the indicators are essentially, a lot of them are telling you the exact same things. And there's nothing wrong with that. Like if you have something that works, but for most people, they don't have something that works. I think the best thing to do is just put out a chart, like a naked chart like I have here, just an EMA, and watch price. That is the best, at least for me. This is the easiest way to kind of get profitable, or at least break even, right? Breaking even is way better than losing money. And I think this is the easiest way to kind of get to that break even point. It's
funny. I have mixed feelings on it, because I think there might be a little bit of bias from you because you had such a great initial run with trading. You did just start looking at the charts and you did start noticing those patterns, and that was huge. But most people aren't so lucky. So I think you probably built a lot of confidence from that, which is great because it's somewhere you need to get to as a trader. I'm pretty big believer in most simple 100% automated strategies are going to struggle very quickly.
Oh yeah.
They could work for a week, maybe, but you're really not going to have edge like that. There's sort of a spectrum of discretionary to robotic, and the best traders I've seen definitely have at least 20-30% of what they're doing is discretionary, but they're very strong at it. Automate what you can 100%. Like if you're finding objectiveness in what you're doing, lean into that, because it's very helpful and it just gets noise off your plate. But getting to that discretionary point, and knowing that you're at the right discretionary point to be capable of using that discretion is a skill in its own. So don't always think you're there yet, because you might win a few times and think, oh, I'm a great discretionary trader. You might watch this and say, oh, I can just do it like him. Use this as an example to learn, and do what he's saying. Continue watching the charts, and this goes for anybody at all skill levels, just continue to watch the charts and continue to take scalp trades, and don't lose your account. Learn to not lose money. That's like your number one goal right now if you're early on.
Exactly. Yeah. Another thing too is the randomness. I hear a lot of people talk about the markets being random, and I think that gets kind of in traders' heads. And I think that's one of the worst ways to look at it. You know, think how much money is poured into, you know, stocks, futures, crypto. Most big players are not random, right? They're not randomly pushing buttons. Even if they're running algos, right? The algos are smart. They're thinking about things. They're not just randomly moving. So I think when you really start to frame it and try to look at it and see why like this makes sense, like in my course a lot of times, or even like for friends, I'll narrate the whole trade, you know, and I'm not saying I can predict the future, because obviously I can't. I have no clue what's going to happen. I can do the opposite of what I'm thinking, but usually you can build as you're watching the price. You can kind of build this idea in your head, like if we're consolidating up here, right? We're consolidating towards our highs. So like if we were just to frame this like this, right? If we were bearish, would we really be consolidating, like pressing on the top right here? Even though we have the sell-off here, for me that doesn't look bearish. We're up here, we're kind of create this little mini range, and we're pressing on the bottom of it, right? Well, you're just thinking about that contextually as you're trading, right? If you're bullish, why are you pressing on this bottom? You know what I mean? If we were to break it back above this 90 MA and let's say hold right here, then I would have taken a long scalp from here. I think it's really, you can actually read a lot into the actual price action and develop this context of what's actually going on. And like I said, there obviously are times when it's, you know, you could call things random, but I think for the most part, there's very little randomness depending on what you're trading.
Yeah, I think there's something to that. Obviously, I think the point that the underlining point of what's trying to be made there is you still don't know. You know, anything can happen. John from Goldman Sachs can say he could come back from lunch and start executing whatever position that he was ordered to execute on for his job, and you don't know that's happening. And when he starts doing it, again, it's usually algos that are driving the execution at these banks, but it's still decision making by individuals or groups,
right?
Of where to get in, how to get in,
and value, right? Like conceptually, if let's just say the dude came back from lunch, if he buys here, someone's going to be really upset, you know, because that's poor value, right? There's no value buying up in here. I think conceptually understanding value is something huge I would spend a lot of time on too. Just understanding, you know, if you buy a car and let's say the car is regular price 20,000, well today the car is 40,000, are you going to go there and buy it? Probably not, right? You want to wait to see if it drops a little bit or maybe stays around that average price. That's why VWAP is incredible, and so is the open price.
Yeah, I like to use the example of like a video game console or like Xbox or something, where Xbox is selling normally at $300, and maybe when a new version gets announced, that current version ends up showing up on eBay. You know, normally it's ranging 290, 310, and then a new version's coming out. Now the current Xbox starts dripping, right? At some point, maybe in the past, maybe the previous version drops to 220. So people are looking for that break and understanding the value. No one's going to want to pay the $300 value on Xbox if the new one's announced and it's coming out in 2 months. And you can start using price action, and you can use like the theories of everything we're doing here. Although it's a two-way auction in this sense, it's just like consumer products. It's just like what they're doing at major consumer stores. They're analyzing the market. They're finding value. They're trying to buy below that value and sell higher. It's the same mechanics. So it's interesting if you start applying this to other markets, like you said, used car markets or video game markets, anything. It's an interesting way to perceive what you're looking at and not just think of it as a bunch of lines and candles. You have to kind of break that. You have to break that boundary for yourself, and then you can start really understanding the whats of and a little bit into the whys of price action.
Absolutely. VWAP's a great tool for that as well, and it's deviation bands. You know, the further out it goes, I always kind of look like that over price. Now, it doesn't mean it can't go infinitely up. It can, it does oftentimes, but yeah, VWAP and its deviation bands are great for quantifying, if you will, or qualifying, you know, where is something overpriced.
Right. And the direction of the VWAP bands, if they're expanding, like you said, those things have something to do with it. You don't just take the level on
Right.
+2 or the -2. It's all contextual, and it's all it's not magical.
Exactly.
And that gets into your nuances. It's not just take the VWAP bands. It's everything around it leading up to what are the VWAP bands doing. JBear's course is excellent. That's good. You got a supporter in here.
Appreciate that. I think Ziggy had a good question I saw pop up
Okay.
on there.
You can click it if you see it.
Let me see.
I got it.
Is there an example of an inefficiency you are comfortable sharing, even if you no longer trade it? Yeah. So one of my best trades, I have no shame in talking about it now, even though back then, like, you couldn't get it out of me if, like, you know, if I was in a bad situation, I still wouldn't tell anyone. But essentially what I did was, in my first exploit that I found, or the first real inefficiency, was I found a period of time. It was under a second. It was somewhere, I don't know how milliseconds are calculated, but it was somewhere under a second, where there was a buyer. I'm assuming it was for some type of retirement thing or whatever, where that buyer would buy every day at the exact same time. I don't know if it was, you know, just some automatic thing they had set up, but he would do it every day at the exact same time. So what I would do is I would show up, you know, once I identified that it was there, I would show up every day. And I had it timed out really weird. Like, I had a bunch of clocks. Like, I spent so much money on different clocks trying to, like, line up the exact time to do this. And I remember I, like, got it dialed in, and right before he would get there, I had basically everything automated except for me pressing the actual, like, button. And I'd press the button, he would buy, and I would just, like, be right in front of it, and it'd just run straight through me and grab my target, and then it'd be over with. And that happened every day for a very, very long time.
So that was John. That was John at Goldman Sachs, the guy.
Yeah, just taking his
That's crazy that you found that. So it was like a size thing. You'd see, like, would he break it down into like 100 increments or something like that and start hitting it?
No, he had it disguised really well. He actually, I was just looking at volume, so I calculate volume by tick. So I was watching the ticks of the volume, like, you know, it's calculating each thing, and I would just see this little spike every day, and then I kind of, like, broke it down and really dove into it. But it's kind of funny, like, this person, you know, was a bank or whatever, you know, and I'm some random person with a Walmart computer for like $300, and they're taking his money every day. So that actually was it was pretty hilarious, and it changed my career. So I'm very thankful for him and his.
That's really cool. And which market was that?
That was on the ES.
Wow. Okay.
That stuff does not exist anymore.
Yeah, I was gonna say, not with the liquidity we have now.
No.
Yeah, that's really interesting though. It reminds me, Brian and I, we when we first met, we had a strategy that was based on the small cap, you know, the stuff that was biomedical, and we realized that these companies would have SEC filings that they have to, you know, register to do an offering ahead of time, and then they have each 6 months, a year, however they registered to start doing an offering. They don't have to actually tell you I'm selling this second, but they do have to let you know ahead of time.
Right.
And when they were doing those filings, you know, there's these biomed companies, and the biomed companies would, you know, and they still do it today. They have some news article, hey, we cured cancer. Everyone buys into it, and then they start doing their offering into it. Pretty common scenario. But the thing we found, which anyone feel free to run with this, we started processing the SEC filings and saw that the listing agent that these companies would hire to do the offering, there was a pattern. I'm not going to mention the names, but you can DM me. I'll tell you. I don't care. But I'm just not going to put it on here. But some of these companies had patterns where they'd sort of start with these listing agents that were reputable, and then they would lean into it when they were trying to get the most out of their company and doing these offerings, where there'd be very specific patterns to which company it was, how long after the offering, and just how much they would try to rile up the market and then sell even harder into it. So we saw those patterns, we saw the companies involved, and then I wrote a bunch of code that was basically automatically parsing all the SEC filings. Brian, ex-detective, he's very used to going through documents like this. So I was just providing all this data for him to start going through, and we kept finding these patterns. Everything was really cool, and we had some opportunity there, but a lot of it came down to a lot of the back tests and simulations we ran. We couldn't take into account the ability to find shares to short, you know, locating. so that kind of broke it. But it's very similar. Trying to find those patterns. There's so many unique edges like that in the market to look for. It's not always just price action and these other things. So keep an eye out, guys. It's harder lately to find the things we're talking about, but edges are there like that.
Working with a company actually that I just had a meeting with them today, but I'm gonna put a tweet out here pretty soon. But they actually have exactly what you just talked about. They have software that helps like track those things, and they use AI to kind of help you. You don't have to code, right, to look for stuff like that, which helps a lot because people like me that are technologically incompetent, it makes it a lot easier for us. But yeah, that's some really cool stuff. Exactly what you were talking about, though. Those are the types of edges where they're only exploits. So you can only catch them for a little bit. You have to ride them while they're good, and then just go on to the next one. But you can make a ton of money with stuff like that.
Right. Yeah. And that's what some of these big hedge funds do. Everyone knows the story of the hedge fund that was putting satellites in space to look at the levels of oil based on the shadows inside the oil contain. What are those containers called? The silos.
Yeah.
They had the tops had floaters on them, and you could see based on where the floater was inside the silo, based on the shadow, the distance, they would calculate global oil supply, and they would make huge moves on oil because they had the best way to predict supply and demand. And that was going as far as launching satellites or controlling third-party satellites in space.
Yeah, so just launch a satellite.
I'm totally going off on a tangent here. Let's get back to some questions. Oh, we're gonna spin. All right, let's spin the wheel, and then I'm gonna let JBear say the names and butcher them because
wonderful.
That's what usually happens.
Lin Vong, Yang Lin Vong.
Congratulations, Raj. We'll be sending you an email. No need to reach out. That's a $200 credit.
Alex Wilkinson. Wow, I'm getting good ones. These are easy.
You want to get a little crazy, Bear, and throw in maybe free access to your course?
Yeah, we could do that. Let's do it.
All right. Just another spin.
Honor236. You can just DM me on Twitter. We'll get that set up for you.
You're gonna get a whole bunch of scammers.
I know, you're like thousands.
We'll give you the email.
Yeah, that'd be cool.
All right, here's another one. Do you have a unique edge? How can you monetize it beyond trading?
Yeah, I don't think that. I think if you could automate it, if you can monetize it, if you can sell it, it's not an edge. That's why in my course I specifically and intentionally make note that you have to add context. Like I'm giving you the setups that I use, and just like most people will give out their setups, but most setups, and I would say almost all setups, don't have inherent edge. The edge comes from the context, the nuance, and not confluence. Confluence is a lot different than context. Those are not the same. Just because the higher time frames line up, that doesn't really mean anything. It's about the context around the actual setup. That could be whatever time frame you're on, but it has to make sense. It has to.
Yeah, I will say I do get a lot of DMs with traders coming to me with, here's my back test, can you put me live? And I love the work they're doing, and I love that they're doing something to try to find edge like that, but it's hard to put them in the perspective of like, hey, this isn't just going to keep working like you think it is. It's a lot more nuanced. The system, the executor, the conditions, you probably optimized your variables for the back test. There's a lot of problems with back testing like that, especially automated. But it's kind of the same vein. It's like if you have a unique edge, how can you monetize it beyond trading? Probably not. You probably just need to be trading.
Another thing too, though, don't share that. If you have an edge and you have a really you're making money, don't share that with anyone, never. Because the second you give it out, I can almost promise you it is going away. I promise you somewhere someone cares, and someone can put size on it that you can't. And once you start throwing enough size at something, it is a matter of time before it goes away. There's no free lunches in trading. If you have an edge, keep it to yourself. I always yell like that in my course for trying to tell me something they found. Don't tell me. Don't tell anyone.
I will say though, if you if you do struggle to execute, you know you'll never execute well. And you can find someone who is actually good at the execution part, not good at the analysis, not good at finding some good edges to work with. There can be some coordination you can do. I've talked to some traders that have worked at some pretty big hedge funds, and that is a common practice where they might have one person do the analysis, the other person do the execution.
I did see that actually in prop. There was one guy, I'm not going to say his name, but I think he follows you guys on Twitter, but he actually did that. He got a job. He had no idea what he was doing trading wise. He was actually, no offense to him, but he's a horrible trader. He knows, he admits that, right? It's not just me saying that, but he had a really good system. He found someone that could execute it, and they made a ton of money on it.
There you go. Okay. And if there's anything you want to talk about, I just want to make sure we get to these people's questions. Don't want to drag you on all afternoon here. Quite impressive. Spot something. Howdy, syndicate. Trade management. Ferris, go ahead and watch the video over. He went over quite a bit of that. Can someone with good execution and analysis be profitable? I don't know if you mean, I guess the than is compared to analysis. You're saying someone with just pure good execution. Analysis. You're going to do analysis in one way or another on any type of execution, but the one probably with the least amount of long-term judgment is going to be scalping. So yes, again, analysis is a broad term, so I'm not sure exactly what the question is, but you might be talking about, there are people that can do great just taking little scalps. And honestly, we kind of encourage that with our base hit system. Traders kind of have a lack of control, so we want to get them into, don't go for huge swings right in the beginning here with us. Just start working on a cadence, kind of stop on the day, take some scalps, and then move on, and we'll start scaling you, work on your size, working on bigger targets, bigger edges, and things like that. So that's sort of how we do things. That's the best way we've found to help people in bulk. Here you go.
For your type of trading, can you lay out a simple roadmap for MNQ to NQ sizing as you grow an account? At what balance would you switch from MNQ, so micros, to full size? So anyone that follows me knows I am anti micros for the most part. Now that does not mean go out there and put on a full size NQ.
As you drive off in your Ferrari.
yeah, don't do that. What I believe is you get on sim and you tirelessly work till you find an edge and build an edge. And once you build one, once you go to trade real money, you need to be trading full size. If you're not comfortable trading full size, then you don't really have an edge. And even if you have a small account, that's the one exception where you're trying to grow that small account. But what I kind of explained in my earlier example was when you're trading for dollar amounts, especially with micros, you get to that point where the dollar amounts may not mean as much. You're going to open up Pandora's box with problems. Like a trade like I took today where I held it only for a minute. You might hold that on a micro, but then you go to you get to a live account, and you're not going to hold that trade for nearly as long because the dollar amounts matter, even though you're maybe not be looking at them. I think the best way to really go is really grind on sim, save up money for an account. If you can't afford a personal account, I really like what the futures desk does. Also, they allow micro scalping where these shorter time frames you can hold. I suggest starting with something like that, really being consistent, working your way up to once you get that confidence. And as soon as you get confidence, you need to be scaling. A lot of people get stuck in that micro 1 mini loophole, and they're just sitting there forever. You have to, once you really get confidence, once you prove that you have an edge, not over a week, I say at least a month. I want to see good results for at least a month. Then I want to start trying it a little bit bigger, a little bit bigger, a little bit bigger. The more robust your system, the faster you can scale. But you definitely start on sim and then go to where you're actually risking. Whether it be through a prop desk like this or through your own account, make sure you start on sim. Then gradually
we've got those practice accounts, and I think it's a nice medium. But the practice accounts are there for a purpose. They're as cheap as we can make them just to cover our costs, so traders can use that. It's just like a loss leader for us. But what's really cool about that is it's when you do a sim, it's zero. You basically have a zero feeling. Practice accounts give you just something a little bit more. It's being recorded by the system. you know, you did put, even though it's a ridiculously low amount of money you're putting on the line, it's better than zero. So that's why we always suggest, look, if you're struggling or anything, just go into the practice account so you're not doing like pure sim, but it gives you some sort of emotion. Again, not much emotion. It's still just a practice account. I get it, but it's better than nothing. Yeah. Cool. Thoughts on FOMC? Do you like FOMC? Do you not like FOMC? Maybe that's what he wants. It's a binary answer.
Yeah,
Yes or no?
FOMC, FOMC doesn't really mean much to me. I'm just trading the price action around it. Or certain news events, I care. FOMC, I don't really.
What would it take for you to hold through the announcement? Do you do that?
Oh, if I was well on sides, if I get on, that's a really good thing. If you are this is for higher level people or people that are really starting to scale up. If you are on sides on a trade, you can really let that run through the news. That is something I learned at the firms I worked at. If you're on sides for an idea, let's just say, for example, like we can use screen here. Let's say, for example, you're short from up here where I was, and FOMC comes in down here, right, somewhere in this area. I would hold that trade. Now, obviously, you got to be careful. You don't want to have too much size on because you can get ran over. If price is moving super fast. But there are trades where I can't tell you. I don't like talking about numbers really, but there was a trade where I could have easily made well over 6 figures if I just would have held, and I was way on sides too. So I completely blew an opportunity. But if you're way on sides, you're not using crazy amount of size. I would certainly hold through certain news events as long as you take care of risk first. But you can make a ton of money doing that type of stuff. You don't want to just enter or exit right before the thing. No, I mean like you're way on sides, like hours and tons of points on sides before you hold through something.
So hypothetical, market's moving down like this, you took that short. You're making trend after trend of rotation to the downside. Would you very quickly get out if it moved against you? I know you're on sides and you have room. It's obviously hopefully not just going to move 100 points in a fraction of a second, obviously, hopefully, against you. But you're sort of using that sense of I'm on house money now, which does, that gives me a little concern when I think in those terms. I like those terms. There's something to it. Like you're in position, you've done really well in the trade, and it's going in a direction still. There's really no reason to get out of the trade other than the potential volatility spike. So what would make you exit that? Let's say news hits, it starts going against you fairly rapidly.
Yeah, so
you wouldn't give back the whole trade, I'm assuming, just because you.
No, I would, whatever portion I had on, because this has to be a committed thing, right? Any trade you take, you have to commit to it. So for me, if that was the decision, right, I made that. Let's just say I pieced out a little bit or whatever size I have on for FOMC, I make a commitment there. My stop is where my stop's at. It has nothing to do with how much money I am on or whatever. So let's just say fake numbers. I have $10,000 in profits right here. I will gladly lose that $10,000 in profits. I would probably stop at break even because I know if it moves fast, I'm probably going to get stopped out above that, right? It's going to go through my order. So I'd probably get stopped out maybe lose 5,000 or sort of 2,000 or whatever it may be. But the upside is 50, 60, $1,000 or more, right? I'm willing to lose that small amount because you have to, don't get me wrong, you don't ever want to give back big chunks of profits, but you have to frame it from like a math perspective. Look at the risk reward on something like this. I would rather price go up and take me out than go up almost, halfway to me, wick, and then shoot down, $30,000 worth of a move. I don't want to do that. I've done that before, and it is the worst feeling in the world. So I'm willing to give back whatever portion I have on.
Awesome. Yeah, it's a decent answer. Yeah, not thinking in terms of house money is pretty important, and that's what he's getting at. Is he's looking at as his broader P&L equity curve. He's not going to miss an opportunity like that if he sees a really good setup, regardless of the trade before it, which is essentially the current trade. Okay. So you are worried about the P&L. Why do you keep it on? Hey, Niels, how's it going, by the way? Niels is CEO over at Delta Trader, one of our partners. He check it out. Cool platform. We include it for free with our Rhythmic connections.
Yeah. So like the P&L is So yeah, it doesn't have to be on your screen, right? But if you've been trading for any period of time, or if you have 20, 30, 40 contracts on, you don't need to have P&L on your screen to know what the P&L is, right? Like, I think the bigger size you use, those like, I agree with what you're saying, focus on points, 100%. But you still subconsciously know, right? Like, if you see a Lamborghini pull up outside, there's not a dollar amount written on the hood, but you know exactly how much that costs, right? Or an idea of it. And that's the same thing with bigger positions. Once you're in a bigger position, and like I said, this is relative to you, that may be one contract, it may be 5 micros. But once you're dealing with these P&Ls that are going up, and you're kind of like working your way like through desensitizing to money, it's not visually seeing the dollar amounts, it's knowing the dollar amounts that kind of becomes the issue. And like I said, I am no expert at holding. I'm not going to say anything on that, but definitely a lot harder than just turning it off your screen, because I don't have mine on my screen.
Okay, right. Yeah, you're in for enough contracts. You see a big enough candle move, you know what's going on.
Exactly.
Just make sure it's not making you miss your mortgage payment.
Yeah.
There we go. And we'll probably wrap it up here. Another few questions, couple questions. But here's another one for you.
How many trades do you take in a day? It really depends. So each trade is separated into categories. Like, so swing trades, I may take a few a week. Intraday level-to-level trades, which I'm the worst at, the one you see on the screen, right? This is kind of a level-to-level trade. I take maybe 1-2 a day. Scalps, I like to keep it. The scalps are tough, right? Because I always tell people 5. I recommend less than 5, but anywhere from that 0 to 10 is kind of the sweet spot, and it just depends on the action. If I'm up 50, 60, 70 points on NQ, I might push a little bit, right? Because I'm up so much. If it's been a tough day and I'm grinding, and I'm just not seeing a lot, I might take 2 trades, take a little bit of cash and walk away. It really depends on the context of the day.
And obviously, in a perfect world, you see your strategy, you take the strategy, assuming everything's aligning. But in real conditions, obviously, it's usually something different, because we do have a psychological exhaustion point we have to respect. There you go. You did mention, YM. This was unique for you. You might only take a few trades on this a year. So where are you looking? Which markets are you monitoring overall?
Yeah, this is a good question. It's probably one of my most asked questions. I've traded everything. Like, if I found I made this comment the other day, but if I found an edge, like in Pokemon cards, where I could trade those and make money, I would do that. I don't care. I have no allegiance to any market. Obviously, I scalp most days on NQ just because it moves a lot. But some days I might, full port NQ with a swing trade, scalping, intraday, whatever. And there are other days where I'll do it in gold, or maybe crude. Like crude recently, I've been trading a lot, not intraday, but like swing trades. Platinum, I only take a few trades on a year anymore, but I tend to make pretty good money on that. I think it just, whatever is in play is what I'm trading, or at least looking at. And all you need to find something in play, like Mike Bellafiore, the one S&P Capital, credit to him for this, but he kind of came up with the stocks in play. Well, I do the same thing with futures markets. Where is the RVOL? Where is the relative range? Like, where are these things expanding? Where are people interested in, or what are people interested in? And when you start focusing on those things, it kind of points you in the direction of specific markets, whatever that may be.
So one follow-up from me. So you're trading the YM, and equity markets tend to have sort of the same general price action patterns. They're more aligned than, say, if you do jump to oil, I've noticed. And maybe if you're trading natural gas, or what do you say, platinum, some of those markets might move differently. They have different liquidity characteristics. I know, generally speaking, they kind of all follow the same market mechanics, but how quickly can you adjust to the price action on a particular market if you haven't traded it in an extended period of time?
Yeah, so I see this a lot, especially from institutions. They kind of they'll preach like the uniqueness of each market, and that is true, right? Like, there are certain tendencies in crude, certain tendencies in RTY. They're all going to be slightly different. But what I found is, for me, those differences are going to be not going to matter in the grand scheme of things, right? Like if you're scalping one versus scalping the other every day, right? Yeah, you're going to notice little things here and there. But for example, like the crude thing, the crude breakout trade. I haven't traded crude in I don't know how long, but when you get this massive dump in volume, you have conflict in the Middle East, you have all these other things pointing to those little tiny little unique nuances in that specific case tend to go straight out the window, right? Look at gold. Gold for years was kind of mean reversion, bouncing around, and then with the election and people started hedging, especially China was getting involved in gold and stuff like that. Gold's gone basically parabolic straight up, right? So you have to apply context. It's pretty easy to hop back and forth between the markets once there's a reason to do so. Now, if you're just blindly, let's say just a Tuesday, and you're just jumping between markets, yeah, you're going to definitely see some little nuances in there that are going to be different, and they're going to be knowing those is going to be easier to pick up or help your trading. But for the most part, if it's in play, it doesn't matter as much. It really doesn't.
So when you mentioned you were looking at like relative volume at these markets, are you just looking at it in like a quote board, or are you like eyeing the charts themselves, looking for a large volume impact? Like you pull up 10 markets.
But I will show you really quick.
Okay.
So
I'm just curious, your process. Do you look through 10 markets every day and then just say, okay.
Like if we look, so I'll have a bunch of charts up on my screen, right? And what I will do is I will eyeball. I'm building a scanner right now with this company to make this stuff a lot easier for the people to follow me, because I get asked about this a lot. But I'm calculating volume on tick, like I mentioned, and what I'm doing is I'm comparing the volume at the open around the New York cash open. So let's say 9:30 Eastern time for me. I'm looking at where the volume is relative on days like this. Like I'm just picking a random day here. What you would have noticed if you would have looked like early in the day, volume is almost level with this. What these are, candles, bars, whatever. But volume on this day was almost level with here first thing in the morning before the real volume actually poured in.
Mm-hmm.
And you can literally look at our vol in that simple way. Now, obviously, the best way is to build a scanner, just a really simple scanner with RVol and relative range, and look at it that way. But there's a lot of different ways to look at it. For me, I've been doing this for so long, I just eyeball it. But yeah, I'm working on building a scanner to make it easier for everyone to look at.
Yeah, that's a great example of don't overcomplicate it right now. Just do what he's saying, and this is a great way to do it. You just noticed that volume for the previous day had already been hit for the current day going into the open, so that's a pretty good sign. Relative volume is going to be strong. Cool. So you are keeping an eye on like price action just a bit, because you are walking through all the markets that you tend to monitor.
Yeah, I just want to. I'm looking for big things, right? So like little mini flat top breakouts, massive capitulation move like the tariff stuff down here, consolidations like we have in here. Actually, wait a minute, there might be.
I think I caught you doing high time frame analysis.
Yeah, well, but I'll trade on the higher time frame though. I won't drop this down to a 1 minute. I would literally trade off the daily. Yeah, so like I said, I separate these. I'm not doing higher time frame analysis, like a higher time frame above what I'm trading. I'm doing the analysis on that specific. Like I will take trades off the daily, which obviously people say, well, your execution isn't going to be as precise. That is true. But what I found is when you execute a daily trade on a smaller time frame, you're going to get lost in all the little stuff that's going on, and you're going to manage the position horribly, and you're not going to be able to frame the context correctly. So like for these trades in here that I was taking these longs, which I don't really like taking longs, it was all done on the daily chart. So I'll give up a little bit of points, or sometimes a lot of points, but for me to have that big picture idea and not micromanage it.
That makes sense. Yeah, finding the right level of abstraction. It's worth losing a few coins here and there if you're getting the bigger move.
Absolutely.
Just let me know if you want to stop. Questions are still rolling in.
I'll take a few more. That's no big deal.
There you go. How do you handle it? Scalps that are going against you after, say, a 4 to 5 point move. Back to your entry.
Yeah, so I have a very specific way I teach this, but what I found is after teaching it for the little bit of time I have, is that most traders struggle with exactly what you're talking about. So for me, I'm only targeting momentum. Like I'll drop down to back to a 1 minute chart here to give you guys some examples. So like if I was to see a trade, let's just say this one, right? Price pushes down below, price comes back up and tags this. All I'm targeting on this move is momentum. So whenever I see momentum die, like see how this green candle is right there where it comes back up, it goes against me, I would instantly get out. My average hold time's like 30-ish seconds on my scalps. I'm just trying to ride that momentum to, you know, whatever side that I'm going in. I will not let a scalp get super far away from me and then come back against me. If I'm purely scalping, now if I'm building into a intraday trade, that's different. But for scalps, I'm just chasing momentum.
I think that's super important for people to hear about. That's exactly what I'm doing as well when I'm looking for scalps. Understanding what your targets are for that particular trade. There's not just one rule where all my trades, I always have a 5-point stop on it. It doesn't matter. It has to do with what the trade is. Like you have to honor what the market is doing. And for scalps, when you're taking really tight risk, you definitely want to just kind of, when the momentum dies, order flow changes, price starts changing, just get out. Just take that move, take that burst. That's a very effective way to scalp. And again, just like he's saying, don't say, oh, I'm scalping and I'm just going to take this huge stop every time. You're probably going to struggle. You don't need to take the full loss every time. You can start understanding the discretion of cutting the trade earlier. You know, if it moves a little bit against you, you can kind of weigh it, but you have to really get in a tight pattern of cutting those trades that are not following momentum in your expected direction. That's sort of the difference. Scalping, very broad term. You could probably interpret it a million ways, but his definition aligns with mine. So,
and your company allows like the micro scalping on shorter time frames. That's huge. I think that is
and we've got the cheaper commissions. You know, we've got seats. So the ES and the NQ, I think are, even if you're doing micros, which you hate, I think the micros are down to 86 cents right now in live round trip on those, and then on NQ, I think it's 240 round trip in QES. So yeah, we want you to scalp. You know, obviously if someone's exploiting something, we always hear about rhythmic stuff where people are doing some crazy stuff. that you can't exploit our system, but we'll find out pretty quickly because we'll move you live and we'll see if that works. Yeah. Yes. You ever traded bonds?
No. Well, I experimented with them, but I didn't trade them. That's something I've been kind of interested in just because there's certain things you can do there that you can't do other places. But no, I have no real experience with bonds.
When you're scalping, are you doing buy, sell stops or market or limit orders when scalping?
I always buy and sell market. I shouldn't say always. Most of the time I'm buying and selling market. Sometimes I will buy the bid, sell the ask. But I think the thing that is I got beat on a little bit whenever I was with any type of firm was they always wanted me to exit in different ways, right? Because when you buy and sell market, you're obviously giving up something. The problem is you can get left in the dust sometimes. And what I found is I will lose more money by trying to have the trade hit a limit than I will if I'm just getting out when I need to get out. So it's difficult, right? The technical right answer would probably be to not use buy and sell market, but if you're scalping, you don't really have a choice sometimes.
Yeah, I think that makes sense. It's a hard balance, but on stuff like the ES, if you're trading some of these markets, you know, buying the ask and selling to the bid, you're usually going to get filled. Unless you start increasing size too much, you might get partial fills. But when you think about it, and I think I've gotten some of this direction from Merritt Black, who you mentioned before. But when he's ready to get in, he's ready to get in. When he's ready to get out, he's ready to get out. If it's not a market order, why he's either not getting in he's probably not getting in at the right time. I think that's sort of the perspective he has.
Absolutely. Yeah, and you can get bad things can happen. You start trying to get too cute and fancy. Bad things can happen. So yeah, especially for if you're trying to get out, just get out most times.
But I would say when you do your scalps, you should be controlling. Again, this would depend on the type of scalp. Everyone has different ways in their strategies. But in the scalping style that seems like Bear and I are kind of overlapping with, I would still put stops in with every one of your trades. Just make them emergency stops. Like, you should be manually getting in and out of your trades, whether it's market or you end up deciding to do limit orders. But beyond that boundary, still just drop stops in there that probably you'll never get hit. But at least worst case scenario, you lose internet connection. People tend to size up on scalps because you are going for shorter moves and it's just momentum based. So put stops in.
Yeah, I didn't mention that, but yeah, I always have a hard stop, and it'll be just out of the way where it's not like in my way. But please, yes, always have a stop on, even just for emergencies.
And what's your exit reasons? I think we already went over this.
Just momentum.
Yeah, just take momentum. If price stops slowing down, order flow starts slowing down. I'll tend to hold on. Pausing isn't a reason for me to get out, right? Sometimes everyone will kind of pull their cards off the table, but nothing will change other than orders aren't being placed, which is a sense of low volume, but it's such a small pocket. Until I see order flow going against me or price going against me, I'll stay in the trade.
And you could use a candlestick as a DOM as well. I didn't mention that, but that's something I'm really big on. If you pull a DOM up and sit it next to a candle, like an individual candle, and watch it move, they are literally the exact same thing. And what you'll notice, like when a DOM stutters, like it starts, price starts speeding up, and you get these rapid little movements. Typically that's signaling some type of move up, down, right? Some big type of break. If you're long or short, whatever it may be, you can get ran over if you're not paying attention to that. So you can really, even though it seems candlestick seems plain and generic, you can certainly use it just like a DOM. Oof, I really should have held that trade. Yikes.
Speaking of an FOMC sell-off, are we hitting FOMC? No. Okay. Not in any trades. So.
You don't use DOM tape. Does slippage become a concern when hitting market? Average hold time is around 30 seconds on scalps. Slippage, most of the markets I'm trading in are extremely liquid. So for NQ, I'll mark it in to orders, and I usually get between no ticks of slip and 1 tick of slip per contract or per 2 contracts. So let's say I enter 2 contracts, I might have a tick difference in price. So that's usually the best way to calculate. There are exceptions, but I've held through news before, and it's not as apocalyptic as people make it out to sound. You get slipped a little bit, but as long as you have a stop in, you'll be all right.
You want to keep going?
I got one more in me. You got one more?
All right, one more.
Let's do a couple more.
Let's see.
Keep me from trading.
All right,
so.
Looks like we have 2 questions.
Have you ever used size so big?
I've done that on it. When I first started on equity markets, I would get caught up after a big move on some no-name stock, and I'd be so zoned in, and my adrenaline would still be going. I had no idea what I was supposed to be doing, and I'd be sitting there, and I'd notice it would just be me and another guy, basically playing on the bed and teasing each other, and like it was the stupidest thing. And time gets away from you, everything gets away from you, and you don't end the day very well. But yeah. Have you ever used size so big? Have you ever moved to ES?
No, I've there's been a couple markets where I probably shouldn't have been in. The other night, sometimes in the evening, I'll trade. There's been a couple times. This is rare. Like I'm not, some whale or something. But there are a couple times overnight where I've exited an order market, and you could tell that I exited the order with a market order, which I got in too big a size and didn't realize how low the volume was. You could tell. It wasn't like crazy, but you could see it.
Sure. I think there's probably 2 levels of that. There's sort of like enough size to affect the market, and then there's enough size to directionally move the market.
Yeah, never moved.
Probably not going to get the move market. No. And I've got a really good friend of mine who coincidentally has nothing to do with my involvement in the markets, but a really close friend of mine, and he ended up working at Goldman Sachs for several years, and he was in charge of oil futures and derivatives at Goldman Sachs internationally. And he was saying, he was even saying, and I asked him this a few years ago, he's like, it's not as easy as you think to move a market. It's not so straightforward, even for the Goldman Sachs of the world. So when you're talking about retail moving market, it's you're not going to directionally start a trend. You can, who knows? You could be that last little marble that makes the mountain fall over. But
some markets will have, like your broker will have size limits for your whatever instrument you're trading. Like Platinum on certain platforms, I can only trade 10 contracts at a time, so they kind of restrict you anyway. Even if you were to, now granted, I would never be able to, you know, move a market, but even your retail brokers are going to make that, you know, virtually impossible.
Yeah, for sure. I have not asked about our upper limits, so I'm sure we'll find out pretty soon. Last question: how do you force yourself to walk away if you're not? So this is the last one, guys. We hopefully Bear's enjoyed his time, and we'll have him back on soon, and we can do a lot more questions, and he can share another trade he missed. But let's just do this last one, and then we'll close up for the day. And the giveaway was already done. Raj will email those winners. But go ahead and read this one, and then
How do you force yourself to walk away if you're not aligned with the market? The downside of trading is that it consumes you. At least for me, I just want to keep slinging lots. Yeah, so this is something that's hard for everyone. I think I don't know if I've like mastered this, but I'm not going to share my screen, but I actually have a giant sign that's on one of my monitors as my background that says essentially when the market is closed, you're not allowed trading. So like sometimes after hours, kind of like the position I was just talking about where I like got in trouble for using way too big a size after hours. I won't allow myself to trade really overnight unless there's crazy high volatility anymore. But I think that's important even for intraday, right? Like I said, you have to have these targets. And I don't mean arbitrary targets like I mentioned before, but some reason to make you stop. You know, if you go into the day just going, well, I'll trade whatever happens, I'll trade my subs as they come. Well, the problem is you might have a day where you have 60 setups pop up. Are you mentally prepared? Are you financially prepared to take those 60 setups? You know, probably not. I'm not. So for me, it's about I want to make a dollar amount that I feel good about. I want to execute great on one good idea or two good ideas. Scalping is a little bit different. You're going to kind of feel it out. But like I said, never more than 10 trades scalping. Never, ever under any circumstances. This is my hard limit for that. And then as far as ideas go, have your big idea. Say, hey, you have to execute this correctly. If you don't, that's your one shot and you're done. And kind of leave it there. It's the easiest way to go for me, at least.
Awesome. I'm just going to show that we've got this 50% off sale right now. Hop on in. Now's a really good time to check us out. Once you pass your assessment, this kind of conversations happen with our traders. So we'll talk about it specifically, what you're doing, what maybe some pointers to help. We're not going to try to like drive, this is the strategy you need to take. We don't do that. We're just going to try to hone what you've got. We're looking for traders with edge. If we had all the edge in the world, we wouldn't need traders. So what we're trying to find is those needles in a haystack and try to help you guys out and help you guys scale whatever you got.
Absolutely. So yeah. Real quick, one thing too is I want to mention everyone watching. Anyone who follows me knows that I'm kind of against the online platform route, but I think that you guys, what you're doing actually gives traders a real shot. And remember, I reached out to you months ago, saying how impressed I was with kind of the model. And I think that if you're watching this and you don't have the capital to really start trading, I think if you're going to choose an online platform, this is Josh and the guys, what they have here is, in my opinion, the best. Also, full disclosure, I did take the assessment, right? I wanted to see it. I told them I wanted to test it out, and I passed it first try. It's not super hard. It's not this big complicated thing. Some of the other ones out there are difficult to pass, but I think this one actually gives you a real shot. I'm not being paid to say that. That's just my personal opinion.
Appreciate that. I know you did mention, we don't have to get into it on here, but I know you didn't like how the base hits were structured. But we did make an adjustment to that to make it, if you have a losing day, it made it a lot easier to catch up. We still believe in what we're doing with the base hits because of how we're seeing traders trade. And the majority of the ones coming to us are sort of, coming from, it's the context, right? Like that in its own, if you look at it in isolation, it's like, well, why are they doing that? But when you look at it holistically, the traders that are coming to us, it's making the most sense to improve them because our assessment is honestly just sort of a hidden training course to try to get you on track. So when we put you in live, you've got a good cadence going. There's a lot of people really struggle with that transition to live. And that's been the most objective because we only deal in 100% objective tests. The most objective way we could do it and not make you feel like you need to lose money because of some consistency or something like that.
Absolutely.
Yeah.
Absolutely.
But yeah, cool. All right. Thanks, Bear. Check him out on Twitter. We'll put the links in the show notes. Check him out on Twitter. Rewatch this. There was a lot of really good gems. But also make sure you check out his latest YouTube videos. And when can we expect that new one to come out? I'm looking forward to it as well.
Who knows?
That's what happens when you announce something. Now you got to put it out, and people are going to
exactly.
be pinging you.
Yeah, that usually happens. I have hundreds of DMs asking, you know, when this or when that, and I'm like, I'm so scatterbrained all over the place. I promise one day it'll come out. I don't know when, but I'm working on a giant, that giant consolidation video, so that's going to take some time, but I'm excited to get that out.
Cool. All right, we're looking forward to it. Thanks again, guys, and see you guys on the desk.